Ever wondered how decentralized finance, or DeFi, stacks up against Wall Street? This is a question that intrigues many, especially those navigating the rapidly evolving landscape of finance. DeFi and Wall Street, both financial systems, operate on starkly different principles and structures. On one hand, we have Wall Street, the traditional financial hub, a symbol of centralized financial power that's been around for over 2 centuries. On the other hand, we have decentralized finance, or DeFi, a relatively new player in the field, using blockchain technology to eliminate the need for intermediaries in financial transactions. It's a David and Goliath story of finance, with DeFi challenging the traditional financial system's norms. In this video, we will embark on a journey, a comparative study of these two financial systems, their strengths, their weaknesses, and their potential for the future. Now, let's dive deeper into the world of DeFi and Wall Street. So, what exactly is decentralized finance? Well, let's break it down. Decentralized finance, or DeFi for short, is a financial system built on blockchain technology, usually on the Ethereum network. What sets it apart is that it's not controlled by any central authority, like a bank or a government. Instead, it relies on smart contracts, which are self-executing contracts with the terms directly written into lines of code. The very core principles of DeFi are decentralization, transparency, and accessibility. These principles aim to democratize financial services, making them available to anyone with an internet connection, regardless of their location. No middlemen, no paperwork, just you and your assets. Decentralization means that the control of the financial system is spread across the network, instead of being held by a single entity. This offers a level of security and freedom that traditional finance can't match. Transparency comes from the fact that all transactions on the blockchain are visible to everyone. This open nature allows for an unprecedented level of scrutiny and accountability. Accessibility refers to the universal access DeFi provides. Be it lending, borrowing, trading, or investing, these services are open to everyone. You don't need to be a Wall Street hotshot or have a 6-figure income to participate. With this understanding, we can now compare DeFi to Wall Street. Tune in as we delve deeper into the intricacies of these two financial systems and dig out the differences that set them apart. Now, let's take a look at Wall Street. This bustling financial district in New York City is more than just a physical location. It's a symbol for the financial markets and institutions that drive the global economy. But how exactly does it operate? Wall Street functions as a centralized system. This means that decision-making and control are concentrated in a small group of powerful entities. These include banks, investment firms, and regulatory bodies. This structure allows for efficient decision-making and can provide stability. However, it can also lead to a concentration of power and wealth. One of the key features of Wall Street is regulation. Government bodies like the Securities and Exchange Commission oversee the actions of Wall Street firms. They set rules to protect investors and maintain fair, orderly, and efficient markets. Regulation can provide a safety net, but it also introduces bureaucratic red tape and can stifle innovation. Intermediaries also play a significant role on Wall Street. These are third parties that facilitate transactions between buyers and sellers. Think of stockbrokers, investment bankers, and mutual fund managers. They match buyers with sellers, manage risk, and provide liquidity. However, this service comes at a cost. Intermediaries often charge fees which can eat into your profits. In essence, Wall Street is a centralized, regulated system that relies heavily on intermediaries. It's a proven model that has shaped our financial landscape for centuries, but it's not without its drawbacks. Having understood both DeFi and Wall Street, it's time to compare them. So, how does DeFi compare to Wall Street? Let's dive right in. At the heart of it, DeFi and Wall Street are both financial systems. They exist to facilitate transactions, manage risk, and allocate resources. But how they approach these tasks is where the differences become apparent. First, let's look at centralization versus decentralization. Wall Street epitomizes the centralized financial system. It's a hub of power, with big banks and financial institutions calling the shots. They hold the keys to the kingdom, controlling who gets access and on what terms. DeFi, on the other hand, is a decentralized system. It's built on blockchain technology, which eliminates the need for a central authority. Instead, protocols are governed by consensus, and anyone with an internet connection can participate. Next, let's talk about transparency versus opacity. Wall Street, while regulated, can often be opaque. Information asymmetry is a common concern, with insiders having the upper hand. DeFi, in contrast, is transparent by design. Every transaction is recorded on the blockchain, visible to anyone who cares to look. This transparency can level the playing field, mitigating the issue of insider trading. Then there's accessibility versus exclusivity. Wall Street can often feel like an exclusive club with high barriers to entry. You need substantial capital and often a financial advisor to get in. DeFi is breaking down these barriers. With DeFi, all you need is a crypto wallet and you're in. You can lend, borrow, or trade with just a few clicks, no matter where in the world you are. Lastly, let's consider the role of intermediaries. Wall Street is riddled with them. Brokers, advisors, bankers, each taking their cut. DeFi eliminates these middlemen. Smart contracts automate transactions, making them faster, cheaper, and more efficient. As we can see, DeFi and Wall Street offer different approaches to finance. DeFi is shaking up the status quo, democratizing access to financial services. But it's not without its challenges: volatility, regulatory uncertainty, and technological risks, to name a few. As with any financial decision, it's crucial to do your own research and understand the risks involved. So, DeFi or Wall Street, which one is better? The answer isn't as straightforward as you might think. Throughout this discussion, we've highlighted the key strengths and weaknesses of both systems. Decentralized finance, or DeFi, offers an innovative, self-regulating financial system, free from the constraints of traditional financial institutions. It offers greater transparency, increased accessibility, and potential for high returns. Yet, it's also rife with volatility and risk, with a steep learning curve that may deter some. On the other hand, Wall Street represents the established financial system, offering stability, regulation, and a tried-and-true investment model. But it's also characterized by barriers to entry, bureaucracy, and a lack of transparency. The choice between DeFi and Wall Street ultimately depends on your individual priorities, risk tolerance, and belief in the future of finance. Remember, we are not financial advisors. Always conduct your own research before making any financial decisions. Thanks for watching. Be sure to like, comment, and subscribe. And hit the bell notification so you'll get updates anytime we upload a new video.